Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. This presentation is going to examine the two companies that have become the center of the Bitcoin amplified equity landscape, Strategy and Metaplanet. They are pursuing the same objective, which is to expand Bitcoin exposure at the corporate level through structured balance sheet engineering. They are doing it with different cost structures, different jurisdictions, and slightly different approaches to digital credits, but both companies are proving that Bitcoin on a balance sheet can be scaled through perpetual preferred equity and other funding tools. Metaplanet obviously still has to come out with theirs. They have raised some money from an international investor in a private offering, but the plan is to have these equities listed publicly next year. This funding mechanism creates a measurable increase in your Bitcoin per share over time, which becomes the real metric for evaluating performance if you are sold on Bitcoin long term. If you are not sold on Bitcoin long term and you are hyper fixated on the fiat price of the equity, you should not be here. Click off of this video right now. At the end of the day, I am a Bitcoin maximalist, and that underpins my entire investment thesis. So added exposure to what I believe to be a certainty underpins what I'm talking about. I don't care if the fiat price does not perform out of your own individual time horizon. Some people have something called low time preference. We have been engineered to withstand a lot more volatility, and you do not deserve the riches that will come to us for being able to wait long periods of time. We all know that the investors out there, they no longer compare companies like this based on traditional earnings models. They don't do that in the slightest. They are comparing how efficiently each company converts capital into long-term Bitcoin exposure on a per-share basis. And the people who say Bitcoin per share doesn't matter, would you rather hold company A, a company with 1 share and 10 Bitcoin, or company B, a company with 10 shares and 1 Bitcoin? The claim of the value of the Bitcoin that the equity represents absolutely matters in this game, obviously. So the purpose of my thesis today is to clarify the amplification mechanics that are at play here of Strategy and Metaplanet. I want to quantify how these structures over multi-year time horizons, how they increase Bitcoin exposure, and I want to highlight the variables that will influence the Bitcoin per share growth. So the question today isn't which company is better. The question is which characteristics produce the sats per share curve that an investor wants over a 5, 10, or 20-year time horizon. What I'm trying to do is give a framework for understanding a very clear benchmark for evaluating these leveraged Bitcoin exposure entities that are in equity form. Strategy and Metaplanet are obviously two of the most advanced examples of this emerging model. You have Strive as well, which I will be doing a video about them shortly because I am starting to get very bullish on the potential entry of ASST. But remember, this is not financial advice. This is financial entertainment. Do not cry. You shouldn't be here if you cannot handle your own emotions. So understanding the differences between all of these companies is pretty much essential for anyone allocating capital into Bitcoin amplified equities. But before I get started into my analysis, I really want to give a quick thank you to Horizon for sponsoring this video. If you guys didn't know, Horizon is amazing. Join Horizon.com. These people, these lovely chaps out there, they help you take the trapped home equity that is in your home, and they help you take it and buy Bitcoin with it. That is correct. Your rotting, disgusting house into orange digital immortality. And there's no debt, there's no monthly payments, and there's no term limits. The Bitcoin is fully yours to hold however you want to with no risk of forced liquidation. I will talk more about them at the end of the video. Bitcoin amplification is a framework for understanding how a company can increase the rate at which its sat per share growth is relative to Bitcoin itself. The goal is very simple. If Bitcoin compounds at 30% per year and a company's sats per share compounds at a higher rate with debt or perpetual preferred equity, that company has achieved amplification. Amplification happens when a treasury company uses these funding instruments to acquire additional Bitcoin on top of its unlevered equity position. The mechanics comes down to 3 different variables. The first variable is the leverage level, leverage being traditionally debt, the convertible bonds from Strategy, for example. And this is important to understand because perpetual preferred equity is not quite the same as debt, but it does act as pseudo-debt, and that's why we use the term amplification. The second variable here is the cost of capital determines how efficient each incremental Bitcoin acquisition is. A lower coupon on a perpetual preferred equity or a lower interest rate increases the gap between the Bitcoin appreciation and the expense that is required to hold that position over time. And the third variable is the dilution path, because we need to know the number of new shares or preferred units that the company must issue across its growth horizon. The slower the dilution, the stronger the sats per share trajectory becomes. And these inputs will decide whether a company produces long-term amplification or fails to do so. Cheap capital that is combined with disciplined dilution results in meaningful sats per share acceleration. And the reality is, when it comes to perpetual preferred equity, the common stock, the shares that you own in MSTR or MTPLF or T3350, that is not diluted at all. But expensive capital out there, that compresses the effect and can eliminate the advantage entirely. There is a difference in the coupon drag amongst different perpetual preferred equities out there. Every single Bitcoin amplified equity vehicle can ultimately be judged by these variables. Now, there are 2 different amplification machines that we're going to be going over today. This breaks down the structural differences between the two because both companies, they operate within the same category, yet they produce amplification through slightly different mechanisms. Strategy is obviously the largest. It is the most systemically important Bitcoin treasury vehicle in the entire world. They just announced this today. They now have 660,000 Bitcoin, 10,000 more than what my slide is telling me, but this math will be based on the math from yesterday because that's when I made this deck. But the BTC yield only increased by 0.1%, so the math still checks out. So with this massive Bitcoin stack, Strategy has already created the scale effects that smaller companies cannot replicate. Obviously, Saylor just bought almost $1 billion worth of Bitcoin today, slightly over 10,000 Bitcoin in 1 week of common stock issuance as well as ATM on Stride STRD. We know that the funding stack to scale this beast has relied on convertible debt as well as the preferreds that have been issued this year, but the capital is transitioning toward the preferred equity entirely because those convertibles are going to equitize. So because that is going to be their strategy long term, and they yield between 8%, 13.5%, Stride got up to 15%, I will be using a blended cost of capital at an average of 10% for the math, for the projections, just to be safe. Everybody knows I'm ultra bullish on this company. Obviously, I talk about it more than anybody. The advantage that I see with Strategy, pretty obvious. The advantage is size. The institutions out there, they seem to trust it and there's growing trust of it. That trust will enable the company to pursue higher amplification levels than a lot of the smaller peers, obviously. That scale of collateral is going to attract more amplification, in my humble opinion. And Metaplanet is really operating at kind of the opposite end of the spectrum in terms of the scale. It holds around 30,823 Bitcoin across 1.14 billion shares right now. Its growth engine is this Mercury perpetual preferred vehicle that has been announced, and the cost of capital with this beast is a 4.9% coupon rate, which is a material advantage when you're running long-term amplification models. When you look at the regulatory landscape in Japan, the broader macroeconomic environment, it allows capital formation at rates that the US companies simply cannot access right now. And this creates that cost of capital efficiency that compounds over time. Both companies, they are building the same category of product. They are acquiring Bitcoin with external capital to increase their sats per share growth. The distinction is in this architecture with the cost of capital, the coupon. Strategy will scale through their brand, through their liquidity access in the United States, and their institutional credibility. But in my opinion, Metaplanet is going to scale with a lot of that jurisdictional arbitrage. Being in Japan, their structural cost advantages. And understanding these differences is essential when you're evaluating the long-term growth trajectories of their sats per share curves. This slide undermines some of the uncertainties that I have because these might matter the most when you're evaluating the long-term potential amplification of Strategy and Metaplanet. These are not abstract risks. These are the ones that I've identified in my humble opinion. Remember, not financial advice. If you want to share your own, go ahead. Each one of these, though, in my opinion, directly will influence the sats per share outcomes over multi-year time horizons. And the first uncertainty that I want to highlight is Metaplanet's demand depth. They haven't even issued this thing publicly. We have seen $140 million being raised so far. I believe that's the correct number. I've seen some people say 130 to 150. I'm just going to say 140 million is a happy medium. So to my mind right now, Mercury seems like a very compelling funding instrument, but the institutional demand profile has not been tested at scale. If you've paid attention to my channel over the past 6 months, you know that I think Japan is a perfect spot for a Bitcoin treasury company to run this playbook. But that said, I'm just saying it is uncertain. We haven't seen it happen. But a good part about Metaplanet is that they need a lot less issuance to achieve 25% amplification because they're such a smaller company. They only need another $560 million in additional issuance of this Mercury to achieve a 25% amplification. Because Strategy is so huge, Strategy needs a lot to steer that ship. So if they have a much smaller capital requirement than Strategy to kind of reach that same level of amplification, we need to also remember that the key variable, though, is absorption. The question is whether the Japanese and global markets will consistently fund Mercury as their issuance program starts to expand. We've seen Strategy issue in Europe now. And we saw more than $700 million worth of issuance. We've seen $899 million from Stream in Europe already. So the second uncertainty that I have is Strategy's capital stack transition. Strategy is currently amplified at 27% when you're including the convertible debt. But remember, as those convertibles will equitize, the management needs to decide if they will aggressively issue new preferreds. I'm sure that they will as much as possible because the math makes sense. But the reality is that maintaining amplification requires ongoing issuance. And when you have billions of dollars turning into shares over the next 3 to 7 years, well, that means that you have to increase the level of issuance of your perpetual preferred equity. So if you're going to entirely reduce the issuance of convertible debt, that means you need to scale up the other one. And we just haven't seen their ability to scale that much yet. I think that they're going to get there, in my humble opinion. I'm super bullish on their ability to do so, but it is uncertain. We haven't seen it. 5x growth over 20 years. The implied sats per share growth is 11.2% annually, which is a sizable difference from that 8% from Strategy. The green line is Metaplanet here, the orange line is MSTR. So the difference, the contrast here is pretty straightforward. Strategy delivers absolute dominance in raw sats per share levels because it starts with a far larger balance sheet, but Metaplanet delivers that higher growth rate in the Bitcoin per share growth because the cost of capital is materially lower. Both of these curves are the logical outputs of my assumptions. If you don't like them, go ahead and make your own. My takeaway that is expressed here in this little call out box is my core insight. When Bitcoin's growth rate and the amplification level are held constant, the cost of capital dictates the divergence in the long-term performance. This is why the cost of capital is tremendously important in different jurisdictions. This is probably why Saylor wants to issue in Japan. The effect is pretty small in the early years, but by year 20, the difference in compounding due to a 5-point coupon spread becomes very clear and unavoidable. So in my humble opinion, this is my mathematical basis for evaluating Bitcoin amplified equities on a sats per share trajectory rather than headline Bitcoin holdings alone. The 5.1% spread between Strategy and Metaplanet is going to become a very dominant factor in shaping long-term compounding outcomes once the Bitcoin compound annual growth rate and the amplification levels are held constant. Obviously, the Bitcoin CAGR will be the same for both of them, but the amplification levels are probably going to be different. But the reality is that if you fix those levels, the cost of capital really has a big difference on the compounding curve of growing Bitcoin exposure as an investor. So this is the mathematical reason why Metaplanet can generate a higher Bitcoin per share growth even if Strategy remains the leader in absolute scale and institutional adoption. The point I'm trying to make is that if you're investing in a very long time horizon, a difference of just 3 percentage points in annual sats per share CAGR, that produces a very wide divergence in long-term outcomes. The cost of capital is not some ancillary detail. It is literally defining the investment case. Every single amplification model ultimately resolves to this variable. And this slide is how I'm going to tie it up. This is just my opinion on how I think about allocation between Strategy and Metaplanet. I am gung-ho bullish on both companies. I love them both. People like to pit them against each other, but in my opinion, I think that they're both excellent investments. In my opinion, there's no universal winner necessarily. It's really based on what your own individual investment thesis is. This is just mine. This is my humble opinion, so I really don't care what your opinion is. You can share it if you want to, but I really don't care if you disagree with me. This is my own thesis. This is what I like about Strategy. I really think it's a preferred choice when you talk about the scale, the liquidity of this thing. If you want a company that's already been validated by some major institutions, this is one of them. If you believe that management can push amplification beyond 25%, I am one of those people. Maybe Strategy will be the better bet. Maybe that's actually the main difference now that I think about it, because Metaplanet has expressed specifically that they are aiming for 25% of their Bitcoin NAV in terms of their amplification. But Strategy has come out with slides in their investor presentations during their earnings calls where they actually model out 40%, 50% amplification, and that would make a huge difference, obviously. And then on the right side, when I think about favoring Metaplanet, I think of that cost of capital arbitrage, obviously. If you're comfortable operating in Japan's structural low-rate environment, even though the yields have been raising lately, which in my opinion is still bullish for Metaplanet over the long term, but I'm not going to get into that in this video. And if you're seeking higher sats per share compound growth, if they reach that same level of amplification, well, this could be an option. If you believe that Mercury can scale meaningfully because of the situation that they're in, if you value jurisdictional diversification inside your Bitcoin treasury portfolio, sure, that might make you naturally gravitate toward Metaplanet. But in my opinion, I'm just saying I don't think that these are mutually exclusive positions. They form this digital credit barbell. In my own portfolio, I don't really care how you allocate. This to me is a decision about how much amplified exposure that you want and which structural pathway best aligns with your objectives. And in my opinion, this framework, this can help to clear up some things for you on how to position both companies inside of a Bitcoin-focused portfolio. As well as including spot Bitcoin, of course, there is no second best to the apex asset. My name is Adam Livingston. I am the Bitcoin Wizard. If you enjoyed this presentation, please like this video and subscribe to my channel, where I bring the daily Bitcoin insights with more energy, more effectively, better than anybody on earth, okay? I am leading the fight to the orange singularity. You have a terrific day. Do not party too hard, my dearest little goblin rascals. Class dismissed. Home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual, and then later when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you've been sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.